Oh my God. Dow Jones, S&P, NASDAQ all hit record high. This is amazing, but very interesting. Only one sector rock new high. What's happening right now? Is there something wrong with this rally, or is this going to be the start of a multi-big bull run? Well, a lot of things happening, and big short Steve Eisman sees only one rate cut. This is going to be a very impactful video. Watch all the way, and you enjoy the information. All right, guys, before that, it's our disclaimer applies as usual, and thank you, Ames, for the kind sponsorship. Now, first of all, the US stock market kept rocketing, right? This is amazing. US stock basically booked the best day in 2 weeks. Basically, the Dow snapped 3 days of losing streak and then keep on rallying, right? Apple shares rose 3.3% after an upgrade from Bank of America. This is amazing. So you can see across the board itself, everything is all green except for Tesla has been going down. And Tesla was one of the main driver stock back then. So what is happening? So if all these things happening right now, all-time high needed, and everybody is asking, so it's going higher and higher, what will happen next? And I can tell you this, guys, things is not going to be pretty. So let's look into more detail, shall we? Now, first of all, there are many reasons why the bull market has been going up. And one of the key primary reasons is because the US actually is forcing the banks to tap on the Fed discount window. It is amazing. That means that they are forcing the bank to basically take money from the reserve in a way and utilize it. And that's the reason why the stock market is moving up. And the thing is this right now, there are a lot of speculation saying that, right, the Fed will have to cut at least 3 to even 5 to 6 rates this year. But the question is this, can it happen? Now, you can see right now in the last FOMC meeting, the minute shows that, right, there's a lot of factor to inform people that they probably need to look at the size of the balance sheet and also somehow allow the reserve to be utilized. And from there itself, look at the borrowing. It's amazing. The reserve of the depository institutions has increased again. So now you understand why the market is going up. And in fact itself, the total usage is about $136 billion in week through December 27, December itself. So all these tells you that right now, they really want the market to stay up. And because of all that reason, you can see right now, the repo market spiked conjoined memories of what happened in 2019. And we all remember that in 2019, the market fell down in March and then it went all the way up south, right? So probably everyone believed that now this is a time because the banks now really need to tap at least required, right? Tap the Federal Reserve discount window at least once a year to reduce the sigma and ensure lenders are ready for troubled time. This is very incredible. So it's like telling you now, come, take the money from me, do what we want, and actually do it. And this is really amazing. So now with that, this all happening right now, right? They are actually putting in a lot of the way they actually lend this money is based on the par value. All right, this is very, very interesting. All right, instead of the fair value of the primary credit. So all this makes the whole window very attractive and it makes it very cheap for the borrowers. So when the borrowers now have the money, what could they do next? Buy. And that's the reason why you see crypto price going up. You see the what do you call the stock market going up. And look at the BTFP facility. Oh my goodness, look at the emergency loan amount. This is phenomenal. So with all this money available, of course, the volume will speak for itself. And that's the reason why you can see the S&P going up. And remember, I told you, right, 4745 is a very critical level. As long as the market can stay above 4745, the market will rocket 4818, and it really, really happened. So guys, this is very important. You must watch my video entirely to understand what I'm trying to explain to you. I can be telling you some weakness, I can tell you some cautionary note, but you must understand itself, right? I will give you two sides view. If the market goes down, I said it may go down back to this 45.97, but I did say before, if we stay above 47 to 45, we'll see 48.18, and this is all happening right now. So now the thing is this, if you look carefully into detail, right, you can see right now that, look at it, all the three indices are now at the record high level, right? Last time we only saw, we saw that it was a NASDAQ was going up, then the S&P was just behind it. But now today we have Dow, S&P, NASDAQ all at a high level, which means that right now, right, if there's going to be any form of market topishness here, this could be one of the signs, because normally market only top when all three indices are at the record high level. So CNBC actually interviewed this guy, big short investor, Steve, to talk about his view. Now, we all know that this big short investor, Steve, he actually is the one who was portrayed in the Big Short movie. Now, he says that, right, he worries everyone is coming into the year feeling too good and see room for disappointment. Okay, so he believed the central bank would aggressively slash rate. In fact, itself, he said that 3 cuts are too high. As a matter of fact, he believed that the most 1 or nil. And it makes sense because why? Why would Federal Reserve cut rate right now and then create another issue for themselves? We all know that the inflation bull wave is coming in again. I'll show you later. And hence, therefore, it doesn't make any sense for the banks, the Federal Reserve, to do any cut rate. But because the Wall Street, everyone is pricing in based on what the FOMC minutes and meeting, their so-called anticipation of the rate levels. Hence, therefore, right, Wall Street is buying it and believe that there will be a lot of cut coming in. So right now, it's all right, we can see that the inversion has now normalized. And if this can continue, right, we all know that usually that is a turning point of the stock market. So the thing is this, right? A lot of people may say that, Kel, but look, the stock market is at an all-time high. Why would you keep on reminding us? Well, you must understand one thing. Do you know that many stocks actually didn't hit all-time high this round? As a matter of fact, itself, right, you can see from this is the S&P daily upside movement versus the S&P 5-day advanced decline line. You can see that shares are not following the S&P 500. And you can look at it right now, we are now at the level whereby you must be very careful because CTAs are now fully invested in the market. Now, of course, there are times whereby they are fully invested, the market goes higher. But there are more times when they are fully invested, the market pulls back. And undeniable right now, we are actually at the level whereby they are fully invested. And when everyone is involved in the market, the question is, who is the one selling? So with that information itself, you can see right now that the market is expecting a stronger economy. But do remember this, every time when this all happens itself is during when the market is at the bottom. Yes, when the market is at the bottom, not when the market is at all-time high. So somehow, somewhere is just very wrong with the whole thing. Hence, therefore, I look at the insider trading transaction ratio, and you can see that, oh my goodness, the insider transaction ratio itself is really at the most heaviest sell level. That means that the insiders are actually selling. And because of that itself, right, you can see right now there is a possibility that we may see a little bit of downside. So that's why traders, you need to be very careful on this. As a matter of fact, right now, there are a lot of these FMS investors expecting a lower short-term rate in the next 12 months, and everybody believe in that. But if you notice that when they believe in that itself, that is usually where the market top is back in 2009, and of course, back in before the COVID and stuff like that. So the time when people believe in certain things itself, and a lot of them are all on one side, you just need to be very careful. And we all know the S&P 500 was kind of flat for the first 5 days. And based on the statistics itself, right, usually we have a few months of selling, then maybe towards the second half of the year, then we have big rally. As here, 6 months later, usually it's up. So traders, with all this information itself, I just want you to be very careful. I'm not trying to pour milk with cold water, but just somewhere is just so wrong. And end of the day itself, we follow the price action, we buy accordingly, but just don't need to put in all your eggs in one basket because you don't want to be caught. But of course, again, you say, Kel, but a lot of people who have been shorting the market are really very badly dead. In fact, it's around the bull is coming in. And because the market broke a new high, it has become an official bull, right? But at an all-time high level, and we compare the short sellers who lost $195 billion in 2023, it seems that it doesn't make sense. So the thing is this, they lost a lot of money on Tesla, and Tesla's coming down right now. But the next one in Nvidia, which obviously are very wrong. So all I can say is this, there are people who lost money in 2023. Majority of them are all short sellers. But the thing is this, with the market at record high level now, you just need to be careful because only one of the whole 11 sectors in S&P need new high. And that is only the technology, all right? The disconnect become very evident that there's considering what happened in the last 5 years. And you can see right now, majority of them are actually pretty sideways. So you compare the technology sector versus the rest of the S&P, it's very clear. You understand why itself the 7 Magnificent 7 are doing well, while the remaining 490 stocks are really not performing. So now with all the bank credit now at the low level itself, we saw the GFC, we saw dot-com crashes, we saw the 1990 recession. Every time when the bank credits are at the low end itself, at the negative zone, we will see something bad. So again, I repeat myself, right, guys? Every time when market hit all-time high, that's where everyone tells me that this is going to be new high and blah, 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 which is not wrong. But if the economy is not doing well and things are coming bad in a way, you just need to be very careful. Now, I may not be correct, but I said before, the recession will come in by March, April this year. Or at least a technical recession. The official recession itself probably will be September. That's whereby you get everybody really at the downside. Then people talk about that itself. But if not itself, right, please be careful because we've seen before the yield curve. The yield curve came down all the way inverted, right? And now because of the expectation of the Fed cutting rates, the yield curve now has returned and normalized. Now, this is really scary because we have proven facts and figures over the last 70 years. Whenever the inversion happened, then it normalized. That is where the stock market will pull back. And this has been proven. And now with the S&P now going to new high, or the China large cap is all going downwards, it just doesn't make sense because you can see it all along itself. They have been moving in tandem. But now these two big markets going in a different direction. Now, of course, again, it could be the US presidential election that's moving it right now. It could be because everyone takes fund from China to go to US. It's all possible. But the question is this as well, right? When this US market get too inflated as well, right, there will be a problem. And because of that, I've been telling you guys this, that when there was a moody downgrade on China as well, I did say that the China stock market will continue to fall. I mentioned again, and even Goldman Sachs, Scott Rubin, he says that December there'll be a pullback, but it didn't happen. So all this tells you that, right, there's a lot of changes going around, and you must be very careful. And when funds really start to relook at the whole thing itself, right, and this get very, very scary, because right now you can see the container shipping rate itself is going up again. It's going up again. And we said before, when this happened, there will come a second wave inflation. And now you understand why it's out in Singapore. We can see that our chicken rice is no longer at $3. And we also know that now food court asks us to basically pay 50 cents for the box itself and so forth. All these things will hit us very hard in the second half of this year. So guys, if you like my video, you subscribe and share with your friends. It's Kel signing off. Take care and have a great time. I'll see you in the near future. Bye-bye.